Hi, I am Marcus Heidkotter, the CEO of Rockwell Trading, and in this video I want to show you a powerful breakout strategy. This here is a 15-minute chart of the E-mini S&P. I'm only displaying the regular day trading session, since I'm not interested in the overnight action. I'm using a simple bar chart, but if you want, you can use candles too. In addition to the price bars, I'm also charting the Bollinger Bands with a standard setting of 20 for the moving average and 2 for the standard deviation. On the bottom of the screen, you see an indicator called Bollinger %B. This indicator is measuring the distance of the closing price of the current bar and the Bollinger Bands. As an example, a reading close to 100 means that the current closing price is close to the upper Bollinger Band. A low reading of this indicator means that the closing price of the current bar is close to the lower band. If this indicator moves above 100 or below 0, then the current bar closed outside of the Bollinger Bands. The entry rules are simple. We want to go long when the current bar closes above the upper Bollinger Band. I colored all the bars that close above the upper Bollinger Band green. And in the same fashion, we enter a short trade. As soon as we see a bar close below the lower Bollinger Band, we enter with a market order. So let me show you an example. On December 5th, 2008, you see this explosive breakout move. The bar is green. This means that prices are closing outside of the upper Bollinger Bands, and we enter at 857.5. Now we are in a trade. So when do we exit? Two simple rules here. First, we place a stop loss at 10% of the average daily range. And second, we exit the trade as soon as the current bar closes within the Bollinger Bands. On December 5th, the average daily range of the E-mini S&P is 38.5 points. 10% of this range is 3 points and 3/4, and we place our stop loss at 853 3/4. As you can see, the market continues to move up. A few bars later, the price bar closes inside the Bollinger Bands, and we exit at 874.5 for a nice 17-point gain. That's $850 for a single contract. Short trades are carried out in exactly the same way. Going short if the bar closes below the lower Bollinger Band, like here at 842.5, and using a stop loss of 10% of the average daily range. Close the trade if the bar closes within the Bollinger Bands. So in this example, we realize a smaller profit of 3 points or $150 per contract. This strategy has a high reward ratio. You will make much more money on your winning trades than you lose on your losing trades. But because of this high ratio, your winning percentage is rather low. It's approximately 40%. In summary, this is a simple and very effective breakout strategy that can be traded on a variety of markets, on the E-mini indices, on interest rates, grains, and even crude oil.